So you've put your hard-earned money into a mutual fund, you're watching it grow, but then this thought creeps into the back of your mind. What if the company managing my fund just disappears? What if it shuts down? It's a scary thought for sure. In this explainer, we're going to tackle that head-on. And that leads us to the big $1 million question, right? If the asset management company, the AMC, that runs your fund goes out of business, is all your money just gone? It's a totally valid fear, but the good news is the way mutual funds are built is specifically designed to prevent that exact nightmare scenario.
So let's just get right to it. The short answer is a big, resounding no. Your money is not directly at risk just because the AMC closes its doors. Now, I know that might sound a little too good to be true, so let's break down exactly why that is.
See, the key to understanding all of this is knowing where your money actually goes. It really all boils down to a super common but fundamental misunderstanding about what an AMC actually does with your cash.
Okay, check this out. The myth is that when you invest, your money just sits in the AMC's bank account, kind of like a deposit. But the reality couldn't be more different. Your money is immediately used to buy actual assets. We're talking stocks and companies, government bonds, things like that. The AMC is just a manager making the buys and sells. They're not holding on to your cash.
Yeah, an asset management company is pretty much exactly what it sounds like. A company that manages assets. They're the pros you hire to make smart investment choices. But, and this is the absolute key, they never ever own the investments that your money bought. They're a service provider, not a vault.
So you're probably wondering, okay, if the AMC doesn't own the assets, who does? And how do I know it's safe? Well, it turns out there's this really robust, 3-layered safety system built into the whole structure, just to protect investors like you.
Let's walk through these layers. First up, you have the Custodian. This is a completely separate, independent company whose only job is to physically hold all those shares and bonds. They're the guardians of the assets. Second, the mutual fund itself is legally structured as a trust. This creates a powerful legal firewall between your investments and the AMC's own company finances. They're two totally separate things. And finally, wrapping it all together, you've got SEBI, the Securities and Exchange Board of India. They're the regulator, the watchdog, making sure everybody follows these rules to the letter.
All right, so with that entire safety structure in mind, what would really happen if an AMC had to shut down? Let's get into the two most likely scenarios that would actually play out.
So there are basically two ways this can go. Option one is a takeover. Another, healthier AMC simply steps in and takes over managing the fund. For you, almost nothing changes, except maybe the name on your account statement. Your investment just keeps on chugging along. The second option is that the fund gets wound up. Now this sounds dramatic, but it's really just an orderly process where they sell all the assets at their current market price and you get your share of the cash paid out to you.
This brings us to a really, really important distinction. The risk of an AMC shutting down is what we'd call a perceived risk. We worry about it, but as we've seen, there are some serious safeguards. So, where should you actually be focusing your attention? Let's talk about the real risks in mutual funds.
The value of your investment is going to go up or down because of these factors, not because of the AMC's business problems. We're talking about market movements, the everyday fluctuations of the stock and bond markets. That's the big one. Then there's the quality of the actual stocks and bonds the manager chose. And for debt funds, there's credit risk, the risk that the company who issued a bond might not be able to pay it back. This is what actually impacts your returns.
So if you remember just one thing from all of this, let it be this. Your money is invested in assets. It is not stored with the AMC. That simple distinction is everything. It's the core idea that keeps your investment secure, no matter what's happening with the company managing it.
And finally, of course, a quick but important reminder. While the fund structure itself is designed to be safe, all investing comes with risk. This content is just for educational purposes. Mutual fund investments are always subject to market risks, so please read the scheme-related documents carefully and always consider talking to a financial professional before investing your money.